Hello everyone, and welcome back to the Token City show. Today with us we have a friend of Token City. His name is Jonah Schulman. Jonah began his career in financial consulting at Deloitte. He was the first full-time employee at Security Token Market, where he was instrumental in transforming the firm into a leading entity in the sector. Jonah became the first person on record to arbitrage a security token for a profit across two regulated marketplaces. He also was instrumental in helping Security Token Market become one of the first companies to tokenize its equity on the Avalanche blockchain. Today, Jonah is the Vice President of Growth at Singularity, building the institutional DeFi space, helping VCs, projects, and funds engage with DeFi in a way that is both confidential and compliant. Hi, Jonah. Welcome to the show.
Hey, it's great to be here. Thanks for having me.
Great to have you, Jonah. Let's jump in with the first question. The concept of institutional DeFi is extremely interesting. I find it extremely enticing. And I think it would be very interesting if you could tell our audience what it is, what are the advantages behind it?
Yeah, it's definitely a fascinating concept. In fact, just this past week, we had an amazing announcement come from the biggest asset manager in the world called BlackRock. I'm sure we all know very well. They decided to tokenize with Securitize. So that alone is, and with BlackRock also doing the Bitcoin ETFs and all the institutions doing ETFs, this year has been massive for the uptick of interest from institutions in DeFi. And what it really is and what it means to me is the convergence of two very different innovative worlds where you have, institutions with the regulatory rules and the controls and their, bureaucratic systems, and converging that with DeFi, with all of the innovations and the different optionality and flexibility of what you can do when an asset becomes tokenized. So we can either talk about RWAs, we can talk about traditional cryptocurrencies, but what's the beauty of it is when the asset is in nature on the blockchain, you can do a lot more. So for example, within smart contract technology, you can encode a lot of different rules that tells the blockchain automatically what you can and can't do. So in the space for RWAs, you can encode regulations, you can encode compliance, KYC. So once you have that, you can go enter the DeFi world and do a variety of things. And I think there's just incredible value creation coming in terms of what you can do with security, what you can do with crypto together in one world.
Good. For our audience, when Jonah talks about RWA, he's referencing real-world assets, which are tokenized securities, basically. Okay, Jonah, so for our next question, Singularity is a very interesting company also, building institutional DeFi. What can you tell us about what you are building specifically?
Yeah, no, this is super exciting. So this is kind of a convergence of exactly what I was saying. Not so much on the real world asset side, but a little bit of background is we just closed a round, raised a couple million, led by some Web3 VCs, but we also raised some money from a big VC called Nomura and their venture arm Laser Digital. So Nomura is a massive Japanese institution. So as you can see already, with the capital raise, we've been able to bring in Web3 and Web2. So in a nutshell, we allow users, focus on institutions, to access DeFi, decentralized finance, in a compliant and confidential way. So very simply speaking, these VCs invest a lot of money into cryptocurrencies, right? And everything is shown in a public domain. So when they move millions of dollars around, whether they're moving from one wallet to another, whether they're trading on Uniswap or another comparable marketplace, all of that is publicly shown. And a lot of time, these wallets of these users are publicly tagged, adding to public pressure and back-end processes where they have to constantly change their wallets. And it just causes a lot of of operational and resource intensive annoyances and costs. So I think we can think of Singularity as DeFi confidential infrastructure into a couple of buckets. So one is ensuring on-chain confidentiality. So everything you already do in DeFi, whether it's trading, staking, lending, borrowing, LPing, you can do all of that through our contract. You can think of it as like a gateway. When you deposit your crypto, go through a contract and directly connect to Uniswap. The difference is what you see on Etherscan or the public domain is not your wallet, but our wallet. And of course, because we're institutional, we make sure our users are KYC'd, so we know so the blockchain knows who they are. In addition, we want to be bulletproof security, so we're doing multiple audits. We're also looking into machine learning, on-chain real-time monitoring to make sure that, in case there's any fraudulent activity, that our protocol can stop it in real time. We're very cognizant of that. In the past, there's been a lot of that. And user-friendly experience. We're kind of converging the Web 2, Web 3 world, so making sure the user-friendly experience is strong and making sure our users can operate in DeFi in a confidential and secure manner.
Great. So you mentioned there already a few use cases. Can you tell us in a bit more detail the value that you expect to provide for different use cases for institutional users?
Absolutely. So off the top of my head, there's one that is very, very exciting that a lot of our users are excited about, and that's in the realm of vesting. So what I mean by that is a lot of these leading, Web3 VCs, their venture arms, they invest in projects, excuse me, invest in projects before it goes live. So in the traditional world, venture capitalists invest for equity, right? And in the private world, unless it's tokenized, there really isn't a huge market for secondary. So you can invest in a project that has a utility token, and once they invest, they're given a vesting schedule, which basically means until the token is unlocked, and then they can trade it freely on the public market. So because our contract is confidential and it obfuscates on-chain activity, imagine these tokens you're allocated can be deposited into our contract, and per the vesting schedule, when it's unlocked and that vesting schedule expires, will be transferred to your wallet directly in our contract, and then you can connect in either sell on Uniswap, you can stake, you can LP, lend, borrow, you can do nothing. The point is, it's up to you. You don't have to worry about the public pressure or anything. For example, just this past week, a massive L2 blockchain called Arbitrum, they had a huge unlocking moment of vested tokens of over $2 billion worth from investors, founders, and team members. And all of these wallets that are seen doing movements on chain are being tagged, and people are watching extremely closely. It actually led to a price dump. So you can see there's already a huge value add there where you can do all of this in complete confidentiality. In addition to the use cases I mentioned earlier, there also is the OTC swap, where you can do, wallet-to-wallet transfers. You can do between maybe someone you know personally to do a transfer with full confidentiality. So yeah, those are the main ones.
Okay, understood. Yeah. What about the technology that you guys use? I assume that as far as I have been able to see, it seems that you guys are using like the most advanced cryptography technology out there. What can you tell us about that?
Yeah, so this is pretty technical. I'll try to keep it pretty high level, but essentially the technology that we are able to do this with is called ZK proofs. It stands for zero knowledge. So it essentially tells the blockchain, without sharing any private information of the person's bank account, tax number, address, etc. It basically, through a third party, sends the blockchain yes or no with a proof, with basically zero knowledge of the publicly, you can't see what's going on, by saying that this person can do this. So we use ZK proofs, and we're using a language called Noir, built by a blockchain Aztec, but we are operational on Ethereum L1. And this is a lot more advanced than other ZK technology languages because it is a lot less prone to errors, as it's a lot easier to work with. It's a lot less resource intensive. And most importantly, data doesn't include something called a trusted setup, which is kind of like an esoteric idea that if we were speaking institutions, it's just not going to fly. So we can do a lot more with a lot less in summary.
Understood. Yeah. Yeah, CKs, they're going to be everywhere at some point. It's a fantastic technology. So, yeah. So regarding, you mentioned Arbitrum, you mentioned Uniswap. Can you expand a little bit more? What protocols in the DeFi space you foresee you will be working with the most? Be it the known ones or less known ones?
Yeah, it's a great question. So as I said, we want to be the DeFi, the premier DeFi confidential infrastructure, keyword confidential. So, when you use our protocol, it's compatible, it's non-custodial with MetaMask, Fireblocks, any wallet or Wallet Connect. Very, very simple to use. Once you deposit your crypto into our contract, as I said, we're integrated directly with Uniswap, with liquidity pools on Ethereum, with liquidity pools on Arbitrum. So we want to integrate horizontally with pretty much eventually every, wherever the liquidity is, we're going to integrate with this application. Therefore, when institutions or users want to use us and be confidential, they can do everything they already do. The strategy is the same. The difference is when you use us, your strategy is confidential. What you see on chain is the Singularity address as a proxy, but once you deposit into us, that your activity is not seen.
Mm-hmm. Yeah. So in the context of the current blockchain landscape, so to speak, how prevalent do you think privacy, so to speak, confidentiality is the term. How prevalent do you think it is going to be, let's say, in the mid to long term in the DeFi space?
I think it's an emerging trend. I really do. If we want to attract the Web2 institutions, also from the RWA side, a lot of these private investors, when we integrate more into the DeFi world and we allow them the optionality to, use their security for collateral loan to get liquidity without selling, I don't think they want the public domain knowing what they're doing. And that's not to say that they're doing anything illegal. I think it's just a human right, and it's not even a human right of just how the financial world has always operated. So if we're talking VCs, we're talking big investors moving 50, $100 billion of assets in the public domain for everyone to watch with their proprietary strategies. It's almost like a failed fiduciary duty to keep the investors' money safe and confidential. So I think when we're working with these big ticket items, these big ticket investors, it's kind of a requirement, to be honest. But if we're really thinking someone moving $10, $100, maybe $1,000, it might not be as important. But for this use case, I believe it is.
Yeah, it does seem that way, of course. You and I, we haven't discussed regulation, but allow me to ask you, how do you see the Singularity service, confidentiality, and so on, fitting in with regulatory bodies, let's say, in the US or the European Union?
Yeah, it's a great question. So firstly, we take a compliant first approach. we make sure that our users are KYB and KYC. So firstly with that, and I think what's important to note is that we're infrastructure. We're non-custodial, we're non-exchange. So having, KYC, KYB is really already above and beyond what's required. And in addition, we have, a paper trail of compliance discussions and demonstrated clear best efforts basis, which reduces our chance of being pursued by a regulator. Of course, the US is extremely stringent with this, but I think we've really taken a compliant first approach that should put it in a good position. And also I think it signals a lot of confidence that massive institutions are using us. As I didn't mention before, our investors are our users. Worked out well that, our target market are the users, or the type of people that invest in companies. So, yeah.
Also, I wanted to ask you, so you are, of course, targeting financial institutions, but at the end, you are basically offering a platform that can facilitate an ecosystem. So from that point of view, how do you see companies like Token City, which, as you know, we operate with real-world assets, or similar companies as us, how do you see, let's say, the startup world in the real-world asset space connecting, interacting with platforms like Singularity?
I think there's actually a ton of synergy with this. And also, my background is in this space, so I understand it pretty well. As I mentioned earlier, I think a lot of these, investors who invest in private equity, real estate, in the private world, traditionally no one knows who they are. Probably because of infrastructure, but in general, if we're investing in the public stock market, even like no one sees individual users moving money around like that, right? So in terms of integrations, because we're operating on an Ethereum, and we're also compatible with EVM chains, if Token City or RWA issuance platform helps companies tokenize their company and their securities, and their users want to access DeFi, they can do that through us with full confidentiality. And what they would do through us, it's like a gateway, as I mentioned, is maybe you go to Aave to take out a collateralized loan with your security. Maybe you go swap it on Uniswap. Maybe you access, Maple Finance. There's a variety of different types of DeFi applications that I think we're going to see RWA, real world asset securities, and tokens accessing DeFi. And I think there is going to be a stronger demand and appetite for these type of users to do this in full confidentiality, so their on-chain actions can be remained discretionary to them.
Mm-hmm. Okay. You mentioned again the choice of Ethereum, and I'm curious if you can speak to what is behind the choice of Ethereum. At least it could be argued that there are more, maybe powerful, maybe more scalable at present chains other than Ethereum. What do you think?
I totally agree. It's a great why we did this. And I think the reality is we have to provide a product that is where our institutions want to go. And that's where the liquidity is. So we're not reinventing the wheel. In Ethereum, on these applications, like this is where all the liquidity is. Of course, we're EVM compatible, so we plan on integrating with additional blockchains like Arbitrum, Avalanche, all of them really. We want to eventually be an aggregator, so then you can find the best liquidity pool and solution for our users. So we're not, picking Ethereum other than the reason that's where our clients and users want to be, because that's where all the liquidity is. Really, from the business standpoint, that's where it comes down to. And I think you have a great point where, with the gas fees and the efficiency, it can be a little bit slower and costly. But if we're working with our target market institutions, they're moving millions of dollars per transaction. A little bit more gas fee might not be a big deal if they're getting the liquidity they need and desire.
Yeah, that makes a lot of sense. Yeah. For our audience, when Jonah mentions EVM, that means Ethereum Virtual Machine, which is basically the core of Ethereum that other very successful and very well-known chains also use. So there's a lot of compatibility between them. Okay, Jonah, we are approaching the end of the interview. I wanted to ask you something else, maybe a little more from a general perspective. For a long while, you were my go-to source when I wanted to learn about the regulatory landscape in the US. So I wanted to ask you, how do you see the regulatory landscape in the US today? I'm sure you're keeping up with it.
Yeah. So I'm definitely not as plugged in as I used to be. But I think what we saw this week signals a strong vote of confidence. I think that there's a specific divide that I feel emerging. Obviously, this is not legal or financial advice, just strictly my own opinion. That the SEC and the relevant regulatory agencies are seeing the writing on the wall of that blockchain converging with securities specifically is really not that complicated. It's simply a technology layer to do the same laws to execute the same laws that already exist, but with more efficiency, I guess is a simple way of putting it. I still think that in terms of specific, excuse me, specific cryptocurrencies, Gensler specifically has a very strong view that he's open about. But I think from the security side, it's pretty clear to me. But from the crypto side and utility token side, I think it's a bit of a gray area. And I think that we're falling behind on providing that clarity, which is allowing a lot more people still to get scammed and frauded. So I think we need a clarity on the utility token side and what you can and can't do. So yeah.
Agreed. All right, so last question for you. Anything you want to say? Where can people find you? Whatever you want to share.
Sure. Firstly, thanks for having me. This has been great. So we plan on going live in about Q2. You can follow us on Twitter at Singularity ZK, and you can also go to our website, thesingularity.network. We're going to be launching a newsletter soon, so stay tuned. And follow me on LinkedIn, Jonah Schulman. It's going to be an exciting second half of the year. We also are going to be launching our own token, utility token, around Q3, Q4. So really exciting things to come. Thanks for having me.
It's a pleasure to have you, Jonah. Thank you so much for being here, and take care.
You too. Pleasure.
Bye. And that was all for today. That was Jonah Schulman from Singularity, an extremely exciting project with confidentiality at the core. Let's see how it evolves and hopefully succeeds very strongly. Thank you for being here with us today. Take care and goodbye.